Joining us right now, K Natarajan from the company. Mr. Natarajan, great to have you on the show. Help us understand what really is the kind of demand surge that you've seen, given that we've just about subsided with the second wave of the pandemic for your products.
Yeah, good morning and thank you for having me on the show. We started the last year post the lockdown during the wave one. Demand did come back pretty significantly back. And then we ended the year with almost 6% volume growth. And in India specifically, we had 11% volume growth despite entire quarter one being a washout. But unfortunately, we also started this financial year with the COVID wave. It took away almost 45 days. We did see impact on our operations, and the demand though was there, but then we had some issues in terms of fulfilling the demand. In June, we have seen it coming back. And like last year, we do see the pent-up demand that was moved from quarter one to quarter two should also happen this year. And we do look forward to repeating what we could deliver last year.
Specific here, your EBITDA per kg of 18.6 rupees was impacted because of higher cost inflation as well. Do you think this is a sustainable number for financial year 22? And have you been able to pass on the RM cost increases on to the customers?
Yeah, so our priority is essentially to ensure that we're able to serve our customers well with the multiple challenges that we're having on the commodity prices front, on the international logistics. Our focus is to ensure that we're able to serve our customers well, look at ensuring that we are able to leverage on all the demand uptick that we do expect to come in the coming months. And we do see that if the demand remains healthy, we don't see a struggle in terms of passing on the commodity price increases. It's important that we keep a very close watch and ensure that we are able to take judicial price increases and keep our growth momentum in place.
So as percentage of your total sales, how much is RM cost? And in last 1 month, given that a lot of raw material prices have come down, palm oil prices have come down, vegetable oil prices have come down, a lot of other raw materials which you use, they have been, they're showing signs of reversing. How has that picture changed?
So in fact, our raw material cost to our revenues is almost about 65 to 70%. But the correction in palm prices have not been pretty significant. They did come down, but they've gone back. So because of the multiple lockdowns that have been announced in Malaysia, in Indonesia, which are the prime producing countries for the palm-based products. Now, this is something that more than the prices, what is important is that we need to ensure that we don't have any disruption in supply chain. And the prices, what we would want is that the prices need to remain stable. You can't have so much amount of volatility. And moving forward, we do see that we need to keep a close watch in terms of how the palm complex keeps moving. And next 2 months will tell us about a clear direction as to which way the commodity prices are going to be moving as far as palm products are concerned.
What was your agreement with your vendor, buyers in this case move? Are they, is price hike a complete pass-through, or there is somewhere in a rising environment you get hit?
No, we have a multiple pricing models. Okay, there are some where we have a complete price. There's some where we have 6-month, 3-month contracts wherein the prices have been built in based on the time that we tied up those contracts. So we cover them back to back. And there are certain portions of the business that we do it on a monthly spot basis wherein we need to manage the risk in terms of commodity prices. We do have a very robust risk management mechanism in place, which ensures that we are able to, we are able to ascertain that we can't have any, significant negative impacts on the P&L account. Managing risk for those sort of contexts is very important, and we do that pretty well.
Okay.
if we take a look at the kind of capex that you've already got underway, if I can ask, what are the key product lines that you're investing in? Where is that majority being used? And also, with an eye to growth in terms of which markets or areas you're actually seeing maximum growth coming in from in the medium term. Share with us really how the strategy is shaping up.
Yeah, so we have two product category verticals now. One is the performance products, which are essentially catering to the base level performance in various formulations, and then we have the specialty ingredients that add that enhance value in terms of the consumer requirements into the formulations. We do see that the pandemic actually has irreversibly changed the hygiene habits of people, and we do see the performance ingredient segment registering a good growth from last year in terms of the changed hygiene habits of people, be it fabric wash, be it dishwash, be it hard surface cleaners, be it hand wash. These markets, since typically in these markets we are well positioned in India and Africa, Middle East, Turkey. For the specialty ingredients, we majorly focus on the Europe and the US markets and the Asia Pacific markets. What we have seen is that the specialty ingredients in the first half did register a negative growth, but we could get back a good amount of the degrowth compensated in the second half. So we ended the year flat in terms of specialty ingredients, and we do see that momentum continuing in terms of the growth, except that the third wave that has also come in around European countries is a cause of concern. But as of now, we do not see an impact. We do keep a close watch on the markets. With regard to my capacity additions, 2 years back, we added capacities of performance surfactants in our Jagadia site. And we did initiate projects for our specialty ingredients, majorly on mild surfactants, on our non-toxic preservatives at my Jagadia site. But unfortunately, due to COVID-1, the implementation got delayed by almost 6 months. And as we were coming to completing the projects by the end of last financial year, we had the second wave striking us. So we are now working on getting these two projects commissioned, which should happen in the next 6 months. And that would going to give us a good amount of capacity to be able to leverage on the sort of demand that we have seen that has emerged for mild surfactants in terms of non-toxic preservatives, the way the consumers are now changing their outlook in terms of wanting to have milder formulations, non-toxic ingredients in terms of preservatives in the formulations. And that's something that we look forward to in the coming years in terms of aiding our growth momentum.
Okay. What about the kind of, for instance, the tier 1 customers that have been emphasizing reduction carbon footprint? Is the company ready to sort of take on that transition as well?
Oh, we are very much ready. And then we do have a good amount of offerings that can cater to, the what you call as the clean future agendas that the companies have announced. And we are working closely with our major global customers in terms of understanding what their project definitions are, and our innovation capabilities, are coming in handy in terms of ensuring that we're able to understand the requirements and start tailor-making solutions to be able to meet this change in the focus that all the major global multinationals are having in terms of moving away from fossil-based fuels, looking at how sustainability is going to be the key agenda for driving business. And we are pretty much mature in terms of the way that we have been running these agendas on sustainability front, in terms of looking at natural feedstocks, in terms of reducing greenhouse gas emissions, looking at how do we get in more amount of our energy consumption being driven by renewable sources. So we're pretty much, and we have announced our targets for 2030, and we have a clear framework in place, and are pretty much intensely focused on ensuring our sustainability targets are delivered, both internally as well as in terms of aiding our customers in terms of furthering their growth agendas in this direction.
Okay, just one other question on ROW volumes, Mr. Natarajan. They were hurt slightly from logistics issues in the last quarter. Have things normalized now?
No, I would say that I would have expected that to happen by September, but the way things are evolving, they are pretty much regressing in terms of the situation. Forget the freight rates at all-time highs. I haven't seen this sort of rates in the last 25 years of being in business. And the other issue, which is very critical, is in terms of availability of spaces on ships, okay, availability of containers, because the entire global logistics has got, the equilibrium has got impacted pretty dramatically because of the COVID situation. And that's something is a big challenge. And I do see how we manage international supply chain is going to be a critical success factor for us. And our team is well positioned to be able to ensure that we are able to serve our international customers well, despite these challenges. I do not see the situation improving, at least as of today, till the end of this calendar year. So we need to be prepared to ensure our growth despite these challenges, and we are finding out innovative ways of managing this challenge.
So lastly, with your increased focus on high margin products, is it safe to assume that around a 10% volume CAGR over FY22 to 24 is something that we can work with as an estimate?
See, we have historically grown about 8 to 10% if you see our last about 5 years CAGR or 10 years CAGR. And the sort of projects we have, the sort of demand uptick that we are seeing, combined with the situation that we're having in terms of the COVID issues, I would like to be cautiously optimistic and probably look at a 6 to 8% band for this year. I would like to beat that particular number, but then as of today, my optimism is getting a little bit impacted because of the operational challenges we have because of COVID, and also demand, the way it is going to pan out in countries which are now also says, experiencing wave 3. Only silver lining is that the vaccination rates are going up, and once that happens at a significantly good pace, that would probably get some stability back into the demand side and our operations as well. So I'm keeping my fingers crossed and wanting to get the numbers better, but I also need to be pretty aware of the fact that the challenges continue to remain on the COVID front.
Yeah, absolutely. Great to have you on the show then, Mr. Natarajan. Thank you so much for taking the time out.
Oh, thank you so much. Thank you for having me on the show. Have a good day. Bye-bye.